The answer to that is really driven by how many months you run delinquent, not the end scenario. The end scenario is relatively meaningless as far as what happens to your credit. The bulk of the credit damage is done in the first 3 to 6 months of not paying on a mortgage. I see a lot of clients that, let's say they have a 750 credit score and they stop paying their mortgage for 6 months. It doesn't matter how it resolves, any scenario you pick, the major credit hit is because they didn't pay for 6 months. And so they might go from a 750 to a 550, and it's almost meaningless. There's in a way, it matters, the timing of it matters most, not what scenario occurs. And since the bulk of the damage is done to your credit early on, it almost doesn't even matter long term. Once that foreclosure suit's filed, the foreclosure's on your record. Now, it would show a final judgment of foreclosure later that would make your credit record worse. But let's say you lose 150 points to your credit score in the first 4 or 5 months. After you get past that hurdle, the credit reporting agencies, instead of dinging your credit score at 30 or 40 per month, taking away 30 or 40 points per month, once it gets a year into it, they're taking them away at like 5 points a month. I mean, your credit's already low. It's not coming back for a couple of years. So it almost doesn't even really matter credit-wise, because you're going to take the big hit up front no matter which scenario you do. For a portion of your question, the answer would be talk to a lender. Talk to your banker, because they would be able to tell you how long after a foreclosure could I buy another house. I have heard of similar programs, and I have known a few people that have gotten into those programs, and so far it hasn't been very productive, and I have one person that is talking to me about suing such a program. There is a lot of programs and promise programs, and any program that the government comes out with today, it'll take the lenders 6 months or a year to implement. HAMP is a bit odd in that the program itself says if you qualify for the program, we'll waive the deficiency, but the fine print of it doesn't really say that. I think most of my clients have decided they're going to go forward and close anyway. I think that's probably fine, because in a certain portion of HAMP does say if you qualify, we agree to waive deficiency. So I'm comfortable with my clients going forward under those circumstances. I see a number of resolutions where the lender says, look, we'll agree to waive deficiency, but I can't speak to the PMI company. They might sue your client later. Now, so far, I haven't really seen any contractual basis for the PMI company to sue the borrower. I haven't seen it. A number of my clients have signed agreements with that exposure out there, and so we haven't really seen it. We don't know about it. It's too new to, who knows in that particular category. But I would be interested to see a lawsuit out of them. I would love it. I would like to fight that one. I do not necessarily believe they're all online, but it could be that there's a number of them that are. No, and in fact, I try to get in front of like mediation managers, and they're the people that run the mediations in Pinellas. I've tried to get in front of a couple, maybe a few judges. But literally, a lot of judges, lawyers, hardly anybody truly knows anything about this stuff. I would like the opportunity, certainly. So if you know somebody, let me know.